Hi everyone. Just touching base in relation to the many changes that have occurred in policy over the past 4 to 6 weeks. I thought it was really important that we provide a very high level summary over the changes at a federal and a state level, followed by a focus on two of the main policies, which is the JobKeeper Policy and the Cashflow Boost. In addition to that, I thought it was important that we provide you an update on our communication strategy, just effectively providing more indirect, passive and less technical detail, just so we can stay on top of updates, provide more relevant and timely information to our clients and our networks. So a lot has changed in policy at both a federal level and a state level over the past 4 to 6 weeks. I thought it was really important for our clients and networks to provide a snapshot or just a bullet point kind of summary of all the changes that have occurred. Just in case anything pops out, it's really relevant to you, you need to get in touch to get more information. So here's just some of the changes that have occurred. So we have an increase in the asset write-off from 30K to 150K. We have additional investment incentive of 50%. We have Cashflow Boost Policy, which I'm going to expand upon later in the video. I have the apprenticeship wage subsidy, which is effectively the government paying 50% of an apprentice or a trainee's wage from January to September 2020. We have the direct payments to vulnerable households and severely affected regions. We have a doubling of the job seeker policy or the New Start allowance. We have the small to medium enterprise loan guarantee. We have a deferral of loan repayments from the banks. We have a relaxation of the responsible lending laws from the banks. We have an increase in the insolvency and bankruptcy protection laws. We have lower interest rates. We have an increase in lending to banks and in particular incentives for banks to lend to small to medium enterprise. We have early access to superannuation. We have a reduction in the minimum pension drawdowns. We have a reduction in social security deeming rates. We have the JobKeeper payment, and we also have a substantial amount of relief available from the tax office, including payment deferrals, renegotiation of commitments for many taxpayers. At a state level, we have payroll tax cuts, we have land tax cuts, and we have increased employment and direct spending on infrastructure projects. The JobKeeper Policy. I thought I'd provide a really quick summary of the policy, followed by my 7 key action points. So what is the JobKeeper Policy? Effectively, it's a $1,500 payment made to eligible employers on behalf of eligible employees for the period 30 March 2020 to 27th of September 2020. So what are my 7 key action points? Well, first one is enrollment, and enrollment can start tomorrow, which is Monday the 20th of April 2020. It goes without saying that you should have registered by now. On the tax office website, there's a separate page where you can register, provide your ABN, your contact details, and get all the information that you need to enroll and proceed to get the payment. If you haven't already done so, I suggest you do so immediately and enroll as soon as possible. Point 2 is just to make sure that you confirm your nominated employees by the 4th of May 2020, which is the earliest date of which you can receive a payment under the JobKeeper Policy. Point 3 is an eligibility review and your documentation to support that, which is absolutely critical. I've had many clients I've worked through this process in the last few weeks just to make sure that they meet the 30% reduction in turnover criteria and they're not wasting their time in terms of meeting the eligibility criteria. Point 4, make sure you have your bank details updated on the tax agent portal for any electronic transfer of payments under the policy. Point 5, if you're a self-administer, make sure your MyGov ID has been set up, although it can be quite difficult to get through. You should have that up and running as soon as possible. Point 6 is your single touch payroll records. You should already be registered for single touch payroll and make sure all your pay runs and payroll records are up to date, which is essential for pre-filling of the JobKeeper Policy application form. Point 7 is just a short-term funding plan to make sure that you can ride out the period between now and the 4th of May, which is the earliest date at which you'll receive payment under the JobKeeper Policy. Cashflow Boost Policy. Thought I'd provide a really brief summary of the policy, followed by 5 key action points that you should be considering right now. So what is the Cashflow Boost Policy? Effectively, it's a rebate of withholding tax to employers for the month or quarter of 31 March 2020, and there'll be additional payments that flow through based on disclosure in that quarter and subsequent quarters for the periods of June, September, and December. The minimum payments to small withholders will be $20,000, and the maximum payment amount to larger withholders will be $100,000. So what are my 5 key action points? Well, point 1 is to make sure you have accurate payroll records in place. And this is just to make sure that the disclosures made in your activity statements have substance. So, payments from your bank support wages disclosures. Your single touch payroll records align with the disclosures made in your activity statements. Your superannuation payments for the March 2020 quarter are all made on time, of which you should be acting right now because super is due by the 28th of April. Your correspondence in any detail in relation to changes made in the March 2020 quarter or the month of March are there and available and support the disclosures made in your activity statements. You have commercial benchmarks which support the wages disclosures made in the month or the quarter of 31 March 2020, and the history and pattern of wages disclosures can be very easily and readily explained. Point 2 is making sure you got your EFT details up to date for any electronic refunds or processing on your integrated client account. Point 3 is to make sure you lodge your BAS as soon as possible. The Cashflow Boost payments come through 14 days after lodgement of your activity statement. Point 4, if you are a client or if you are a taxpayer with integrated client account debt, a Cashflow Boost will obviously reduce the level of your debt and might be a good time to call the tax office and renegotiate a payment plan, minimise or defer payments owing to the tax office. And point 5 on cash flow is make sure you update your cash flow forecast when you've crystallised a benefit from the Cashflow Boost to make sure that it's factored in any benefits you're receiving under the Cashflow Boost policy.